Hey everyone, and welcome to our February tax e-news. You know, the April 6th tax year end is coming at us fast. And this is your guide to making sure you make the smartest moves with your money before that deadline hits. So let's get right into it. So what are we covering today? Well, we've got 5 key things on the agenda. We'll start with your essential checklist. Then we'll look at how to get the most out of your personal savings. Dive into some strategies for businesses and investments, cover the big tax changes that are just around the corner, and wrap up with a couple of other crucial things you need to know. All right, first up, Section 1, your year-end tax checklist. And believe me, that clock is definitely ticking. So let's just start with the biggest question of all. Is your money ready for April 6th? The whole point of the next few minutes is to make sure you can answer that with a confident yes. Okay, let's get into the good stuff. Section 2 is all about maximizing your personal pot. We're talking smart, simple moves for your savings and your pension. The first and maybe the easiest win is your ISA allowance. You've got 20,000 pounds you can stash away completely tax-free. But here's the catch, it's a use it or lose it situation. And hey, if you're under 40, don't forget about the lifetime ISA. It comes with a 25% government bonus. I mean, that's literally free money. You don't want to leave that on the table. Now check this out. This is where pension top-ups feel like a bit of magic. Let's say you put 4,000 pounds into your pension. Well, the government instantly adds $1,000 on top of that. Just like that, your $4,000 becomes 5. And it gets even better if you're a high-rate taxpayer because you can claim another 1,000 pounds back. So think about it. $5,000 lands in your pension pot, but it only really cost you $3,000. It's an incredible deal. Okay, now listen up because this is for anyone earning in that sweet spot between $100,000 and about 125,000 pounds. Because of a weird quirk in how your personal allowance gets taken away, making a pension contribution in this income bracket can give you an effective tax saving of 60%. Yeah, 60. It's an absolutely massive opportunity to boost your pension and claw back that personal allowance. All right, just a quick but super important deadline alert. You need 35 qualifying years of national insurance to get the full state pension. If you've got gaps in your record, you can pay to fill them in. The deadline to fill the gap for the 2019/20 tax year is April 5th, 2026. Seriously, it's well worth checking your record online to see if this applies to you. All right, switching gears now into Section 3, business and investment strategies. If you're a business owner or an investor, listen close, because now is the time to be thinking about your dividends, allowances, and any gains. Okay, you need to know this. From April 6th, the tax you pay on dividends is going up. The basic rate is jumping a full 2 percentage points, and the higher rate is climbing too. So if you're a company director, you might want to think really carefully about the timing of your next dividend payment. You could save some real cash by acting before the deadline. Let's talk about the AIA, or the Annual Investment Allowance. What is it? Well, put simply, it's a 100% tax write-off for money your business spends on equipment, and that can be new stuff or even secondhand. It's just a fantastic incentive to invest back into your business. And right now, the limit is a whopping £1 million. A million. So if you've got any big purchases planned for your business, it might be a really smart move to bring that spending forward. And hey, for limited companies buying brand new equipment, don't forget there's also the unlimited full expensing relief, which is another massive perk. Now, this timeline here, it tells a pretty clear story. The capital gains tax rate for things that qualify for special reliefs, like business asset disposal relief, is on the rise. We're in the 14% bracket this year, but come April 6, 2026, it's jumping up to 18%. So if you're thinking about selling a qualifying business or asset, the timing is now more critical than ever. All right, let's move on to some of the big changes you need to get on your radar. Section 4 is all about what's new for inheritance tax, working from home relief, and making tax digital. Okay, some really good news for a change. The government has done a complete U-turn on inheritance tax relief for farms and family businesses. The proposed cap from April 2026 has been bumped up to a much more generous £2.5 million. And even better, it's transferable between spouses, so that's a potential $5 million combined, tax-free. This is a major, major win. All right, now for some not-so-great news, especially if you've been working from home. The general tax relief for home working is officially ending from April 6th. For a basic rate taxpayer, that's a tax hike of £62 a year. For higher rate folks, it's £124. that automatic relief is just gone.
Okay, a big heads up for all you self-employed people and landlords out there. Making Tax Digital is coming for you. If your total income is more than £50,000, then from April 6, 2026, you're going to have to keep digital records and send quarterly updates to HMRC. The time to get ready for this is, well, now.
Okay, we're in the home stretch now. For a final section, we're going to look at what else you need to know, including a key court ruling and some dates for your diary. So this one's a little bit technical, but it's really important for anyone dealing with VAT. The Supreme Court recently made a big ruling in a case involving a hotel. And the key takeaway is this: you can't reclaim VAT on professional fees if those fees have a direct and immediate link to a VAT-exempt transaction, like selling shares. So even if the grand plan was to fund something taxable, it's that first direct link that the court cares about. And finally, let's just do a quick run-through of some key dates that are coming up fast. We've got corporation tax deadlines on February 1st and March 1st for certain year ends, and PAYE deadlines on February 19th and March 19th. If any of these apply to you, make sure they're circled in your calendar.
Phew, we have covered a ton of ground, haven't we? From your ISA to big business changes. So, I'll leave you with this final, crucial question. Looking at everything we've talked about, all these opportunities and deadlines, what's the one move you're going to make before April 6th? Something to really think about. Thanks so much for joining me for this explainer.